Hey there. You know how most people treat the stock market like a roller coaster, screaming on the way down, cheering on the way up, and occasionally throwing up in between? Well, Warren Buffett, he's the guy calmly eating ice cream in the front seat, totally unbothered. While everyone else is chasing shiny new stocks, Buffett is sitting back, sipping Coke, and saying, "Nah, I'll take boring, please." And somehow, he's the one who ends up a billionaire. So, what's his secret? How does he make mind-numbing investments look like the smartest move ever? Let's dive into that, with a little help from our imaginary friend Bob. Bob's your average guy. He scrolls through finance videos on YouTube at 2 a.m., half convinced he's discovered the next big thing every other week. One day it's crypto, next it's AI, then suddenly it's lithium mining companies in Chile. Bob is basically an enthusiastic squirrel, chasing whatever shiny nut the internet throws at him. Now, Buffett, if you ever met Bob, would probably pat him on the shoulder and say, "Son, investing isn't about excitement, it's about patience." But patience isn't exactly a trending word on TikTok, right? See, Buffett's strategy isn't built on wild bets or flashy trades. It's built on something that sounds so boring it almost feels wrong to say out loud. Buying great companies and never selling them. Not great stocks, great companies. Let's pause on that for a second because it's a big difference. Most people treat stocks like lottery tickets. You buy one, hope the number goes up, and sell it fast. But Buffett treats a stock like a long-term friendship. He asks questions like, would I still like this company if the stock market closed for 10 years? That's deep. Most of us can't even commit to a Netflix show for 10 seasons. Buffett looks for businesses that make simple, understandable things. Stuff people use every single day. Coca-Cola, Apple, American Express. He once said he only invests in things he can explain on a napkin. If a company needs a PhD in quantum finance to understand, Buffett's already walking away with a Dairy Queen cone in hand. Now, here's where the boring part becomes genius. Let's imagine Bob again. Bob finds a company that makes some revolutionary AI toothbrush that claims to read your emotions. It's flashy. It's trending. Everyone's tweeting about it. Buffett? He's not even blinking. He's busy buying shares of a company that sells, wait for it, toothpaste. Not emotional AI toothbrushes. Just plain old-fashioned toothpaste. The kind you've been squeezing since you were 5. Because while Bob's futuristic toothbrush company might go viral today, there's a solid chance it'll vanish tomorrow when someone invents a toothbrush that also does your taxes. But toothpaste? People will still be using that in 50 years. That's Buffett's logic. He bets on habits, not hypes. And the results speak for themselves. When you zoom out, Buffett's portfolio looks like a museum of predictability. Banks, insurance, railroads, consumer goods. Stuff your grandpa probably owned before you were born. But every one of those boring companies has one thing in common. They make steady money. Year after year. Crisis after crisis. Meanwhile, people like Bob are busy riding emotional roller coasters, buying high, selling low, and wondering why their next big thing always ends up being the next big regret. Buffett once said the stock market is a device for transferring money from the impatient to the patient. Let that sink in. Every time Bob panics and sells his stock because it dropped 5%, Buffett is probably somewhere smiling, quietly picking it up on discount. He doesn't need excitement. He needs consistency. Now, here's something even funnier. Buffett's idea of excitement is getting a good deal on stocks. When the market crashes and everyone else is panicking, Buffett treats it like Black Friday at Walmart. Oh, you're selling quality companies for 30% off? Don't mind if I do. That's why he famously said, "Be fearful when others are greedy, and greedy when others are fearful." Basically, he buys when the world's losing its mind. But here's what really separates him. He doesn't just buy and hold forever because he's lazy. He does it because he actually understands what he's buying. He reads hundreds of pages of financial reports every day. Not TikTok threads, not stock tips, not Reddit memes, real data. He studies how the company makes money, how much cash it keeps, what kind of moat it has. And no, not the castle kind. A business moat is something that protects a company from competition, like Coca-Cola's brand loyalty. You could start a new soda company tomorrow, but good luck convincing Coke drinkers to switch. Buffett loves moats because they make a company hard to kill. It's kind of like Bob trying to start a new fast food chain next to McDonald's. He might have better fries, but McDonald's has something stronger: people's habits. That's what Buffett buys. Not just profits, but habits. He knows humans are creatures of routine. We drink the same soda, use the same toothpaste, and swipe the same credit card, sometimes for decades. And while everyone else is chasing the next flashy thing, Buffett quietly sits on those habits and lets time do the heavy lifting. Here's where it gets interesting, and a bit sneaky. Buffett's not chasing high-growth companies, but because he buys them at the right price and holds them for decades, his returns often beat people who spend their lives trading. It's like the tortoise and the hare, but the tortoise has a private jet. And the crazy part? Buffett doesn't even use complicated math. He's not running secret algorithms or day trading 12 monitors at once. He's literally just applying common sense at billionaire scale. He once joked that if you have an IQ above 130, you can afford to sell the extra points, because investing only needs you to stay calm. That's his secret sauce. Not genius, but temperament. Because let's be honest, it's boring to do nothing. When everyone's talking about crypto exploding or AI stocks doubling, it takes superhuman chill to say, I'll stick with my bank stocks, thanks. But that's exactly what Buffett does. He'd rather look stupid for a few years than broke forever. And every time a bubble bursts, .com, housing, crypto, he's still standing there, quietly collecting dividends from his boring companies. So while Bob's portfolio looks like a graveyard of trendy stocks that once changed the world, Buffett's portfolio looks like a steady stream of businesses that never stopped making money. It's almost unfair how simple it sounds. But simple doesn't mean easy. Because to invest like Buffett, you need the one thing most people don't have: patience. And patience, well, that's where we'll pick things up next. And patience, my friend, is the most underrated superpower in finance. Everyone wants to double their money overnight, but nobody wants to wait 10 years for it to grow quietly in the background. Buffett, he's basically the Gandalf of waiting, while the rest of the market's running around yelling, "Fly, you fools." Buffett's sitting there, calmly saying, "You shall not pass until I get a good price." See, the funny thing about patience is that it doesn't feel like you're doing anything smart. It feels like you're doing nothing. And that's torture for most investors. Bob, remember our overexcited investor friend? He can't sit still. Every time he opens his phone and sees red numbers, he feels like his portfolio's crying for help. So he sells. Then, 2 weeks later, it bounces back and he's like, "Oh no, I sold too early." So he buys again. Rinse and repeat until Bob's broke and emotionally exhausted. Buffett, meanwhile, could watch the same red numbers for months and not flinch. To him, volatility isn't danger, it's opportunity. When stocks go down, he doesn't panic, he goes shopping. He treats the market like a grocery store. If his favorite cereal goes on sale, he buys more boxes. He doesn't complain that the price dropped. But for some reason, when stocks drop, everyone acts like the cereal's suddenly poisonous. Buffett's calm comes from understanding what he owns. If you own a solid business, a temporary dip doesn't scare you. If you don't understand it, every bump feels like a heart attack. That's why Buffett keeps saying, never invest in a business you can't understand. It's not because he's against innovation, it's because he knows his limits. If a business is too complicated to explain to a teenager, he moves on. He stays in his circle of competence, which is basically the fancy way of saying, stick to what you know. Bob, on the other hand, wants to know everything. He's convinced he can predict which EV startup will dominate the market or which biotech firm will cure aging. Buffett doesn't bother playing that game. He focuses on companies that don't need to reinvent the wheel every year just to survive. businesses that make stuff people will always want, like insurance, soda, or snacks. You can call that boring. He calls it predictable. And predictability is what keeps compounding steady. Here's a fun mental image. Imagine you plant a money tree in your backyard. It grows slowly, painfully slowly. For years, it barely changes. Then one day you wake up and it's huge. That's compounding. Buffett's been compounding for decades. Not through magic, but through time. He once said, "My wealth has come from a combination of living in America, some lucky genes, and compound interest." Notice how he didn't mention genius stock picks or secret market formulas. Just compound interest. Because the math of compounding is simple, but the patience required to see it work is brutal. If you invest $10,000 and it grows 10% a year, it doesn't become $100,000 in 10 years. It becomes $25,937. That's not impressive. But give it 30 or 40 years, and suddenly that same boring 10% return turns into $500,000. That's how Buffett wins. He's been letting his money sit longer than most people have been alive. Meanwhile, Bob keeps uprooting his money tree every few months to check if it's growing. Spoiler, that's not how trees or wealth work. Buffett's boring investments aren't about avoiding risk. They're about managing it smartly. He's not gambling, he's calculating. He doesn't try to beat the market every day. He lets the market beat itself over time. Think about it like surfing. Most investors try to ride every little wave, flipping around, wiping out, constantly chasing the next big swell. Buffett? He waits for the perfect wave, paddles in once, and rides it all the way to shore. Less drama, more payoff. And here's where it gets kind of ironic. Buffett has access to more money, data, and financial experts than almost anyone alive. But his approach is simpler than 90% of investors. He reads, he thinks, he waits. That's it. He's proof that being rich doesn't mean doing more. It means doing less, but smarter. And the reason he can do that is because he doesn't let emotions run the show. Fear and greed are the real villains in investing. Fear makes you sell too soon. Greed makes you buy too late. Buffett stays somewhere in the middle, calm, rational, and slightly amused at the chaos around him. You can almost imagine him during a market crash. Everyone's screaming, CNBC is running red tickers, and Buffett's probably saying, looks like a good day to buy more Coca-Cola. He thrives when others panic because he trusts his process. And his process is simple. Buy good businesses. Hold them forever. Don't let noise mess with your logic. Even his partner, Charlie Munger, once said, the big money is not in the buying and selling, but in the waiting. That's the part nobody wants to hear, because waiting doesn't feel productive. But that's exactly why it works. Patience is rare, so the rewards for having it are huge. And honestly, that's what makes Buffett's strategy kind of beautiful. It's accessible. You don't need to be a billionaire to apply it. You just need to slow down. You don't need to chase every hot stock or read every financial headline. Just find a few companies you believe in, companies that make real things with real profits, and stick with them. Even Buffett says that if you don't want to analyze stocks at all, just buy an index fund and hold it. You'll still outperform most active investors over time, because boring works. But boring doesn't look smart, at least not until 30 years later, when everyone's asking how you got so rich. So, if you ever find yourself wondering what Buffett's secret really is, here's the truth. He's not trying to be right every day. He's trying to be right over decades. He knows that time is the greatest multiplier of wealth, and the only people who benefit from it are the ones who don't quit halfway. Bob, by now, might have finally learned that too. After watching his 10th next big thing fizzle out, he might finally decide to do the unthinkable. Buy a few solid companies, ignore the hype, and wait. And one day, he'll look back and realize that the boring stuff worked better than all his flashy experiments combined. So, in conclusion, Warren Buffett's secret isn't magic, luck, or inside information. It's patience, discipline, and the willingness to look boring while everyone else tries to look brilliant. He doesn't chase trends. He bets on time. He doesn't panic. He plans. And that's why, decades later, the man still beats Wall Street while sipping cherry Coke and eating McDonald's for breakfast. Maybe the real financial wisdom isn't about finding the next big thing. It's about finding something good enough to never sell. If you want me to make other videos explaining these topics, please like and subscribe. Thanks for watching.